Yep.
At College Station, Texas, it is one of the 4 food groups.
Right, exactly.
Lone Star
Barbecue,
beer
yep.
and Pop-Tarts are in there. So, Jess Menton, did you survive on Pop-Tarts?
I did, and also strudels.
Strudels.
Yes,
Very
but
good.
then I had the bad habit of just wanting to eat all of the icing, and then you're supposed to have like 1 or 2, but then I'd eat the whole box. And then
My father would go nuts because one of my sisters wouldn't finish the Pop-Tart. Nutritious as it was.
I mean, I love them.
Like Lisa, they were like,
So not good.
We're going to do an equity update here because there's a lot of story stocks right now working. What do you got, Jess? What are you working on this morning?
Well, actually, I was looking at the options market potential move here for CPI day. So heading into this, Stu Kaiser over at Citigroup, he crunches a lot of the options-related data.
We had him in studio today.
Right, and so they were seeing a potential 1.2% move in either direction for the S&P 500 today. But as we know, volatility, as y'all have been talking about, elevated in general. So usually the straddles the day before a CPI day like this, they've averaged around 0.8% over the last 12 months. So you've had CPI days with the S&P 500 down about 5 of the past 12, but a lot of that had to do with, say, earlier this year when those reports were a little bit stubbornly high there. So it'll be interesting because we saw a huge move yesterday, big rally in the S&P 500, and we're getting close to kind of some technical resistance levels for the S&P. So it'll be interesting to see kind of how things shake up and close today.
From where you guys sit,
yes,
like the put-call ratio,
right?
It's like ancient. You have no idea. Paul, remember the pay? Remember,
Yeah, absolutely.
What was it?
Sure.
T. There was something else. The Trin.
Oh, true. That
Trin.
measures volume. Yeah. I keep a close eye on that.
30 years ago or whatever, you Paul, you couldn't be on the street unless you did Trin.
Right, because
know.
you can see the buying and the selling pressure.
Does anybody look at put-call ratio anymore?
So it's a little convoluted, and with Trin is interesting because a lot of times when I talk to technicians, especially with the rise of ETFs and other forms of fractional trading as well, it hasn't worked quite as well, but you usually use them as inflection points. So when you see big lows, say with the S&P 500 in October of 2022, or what would have happened during the pandemic lows, different instances like that, or like in December of 2018 when the S&P 500 had bottomed on Christmas Eve, you can see those inflection points when selling pressure or buying pressure can go either way. But that was something I was looking at last Monday after we saw that big sell-off.
Have you ever made money in options?
No.
I'm like 0 for 14.
Yeah, forget about it.
Yeah.
Paul's
Futures,
over it.
options. Yeah, exactly. All right, I'm looking at for the S&P 500. Here's my technical analysis knowledge. The RSI function, relative strength. We're at, it's oversold at 30. It's overbought at 70.
Yeah,
We're
if you look
sitting
at
right
last
smack in the
week,
middle.
right where it hit 30 on a daily basis,
Yep.
that's when you saw it rally for also
Wow.
the S&P 500, the
I love this
NASDAQ
stuff.
100. But a lot of times technicians will look not just for daily charts, but they'll look weekly, monthly as well. But because things were just so dramatically oversold that day, you saw that big bounce.
I mean, Abigail Doolittle, who covers the markets for Bloomberg Television, she's a big technician, and she says it's not only, the range is 30 to 70 on the RSI. It's kind of where the momentum is and kind of the trend. The trend is sharply higher.
Right.
And we still got room to go to get to 70. It seems like from a technical perspective, bouncing off that craziness from a week ago Monday, maybe the market's still got room to go from a technical perspective.
And you have the S&P 500 yesterday actually crossed back above that 100-day moving average. It's actually around 53.16. But if you look at that 50-day, getting really
Right at
close
it.
to that
Yep.
54.51.70 there is where the 50-day is. Just a whisker away from that. So that'll be interesting to see if that ends up being for systematic trading that might have those algos tied to it if it bounces or not.
I use a fancy moving average thing invented by George Kleinman, legendary at Merrill Lynch years ago. And I must say, to your good moving average analysis, they're incredibly elegant. This drop down perfectly nailed the SPX long-term moving average I use, and the second iteration coming up off of it. It's called a kiss, folks, when the candlestick, I call them candle pins because I'm from Boston. When the candle pin hits the moving average, that's called a kiss, and I have a perfect kiss off not the band, Paul, the kiss.
All right,
I
I'm
have
with
a
you.
perfect
I'm with
kiss
you.
off the long-term
Are you a fan
moving
of
average.
Kiss, Tom Keene?
I never was. Lisa, she's got posters still up in her bedroom.
No, you know what we found out today? Lisa Matteo's a fan of New Kids on the Block.
Oh, I believe it.
Okay, thank you.
I was always like an NSYNC gal.
Okay.
We didn't sing last
Backstreet,
hour. You
okay.
hadn't badged in yet when we did that. What do you think about the Mars takeout? I mean, is your equity desk done anything on the Mars thing?
Well, I mean, I think it's a big story too, and I think it's important just to give you like a concept of kind of like what that means for that particular industry and kind of what that tells us more ahead. But I think for us, it's been more of the looking at the macro, looking at the flows, looking at especially positioning, because Deutsche Bank actually last Friday they put out how, especially if you're looking at systematic or discretionary investors, how much it was cut under, because they obviously was over positioning toward tech, but now you're seeing those rate sensitive corners of the market like utilities, REITs continuing to see not too over positioned, but we're seeing a flip now between tech and then those two corners.
So what's happening in your research literature? What's happened to the Mag 7 dynamics?
So there's
live on?
Yeah, so there's a Mag 7. We have in my G where I save my charts, you can see the valuations for the Mag 7 and how much they came down. So it was trading above 30 for those valuations for those Mag 7s. They came down to about 27, 28 when you're looking at the forward price to earnings ratio after the sell-off that we saw last week. So they came down a bit. Be interesting to see kind of how this plays out the rest of August.
Do you run them semi-log or do you run an arithmetic y-axis?
Well, so we have custom index charts that we'll build in for our equities team. So that one's specific to...
I'm just trying to impress you. I have no idea what I'm talking about.
I mean, and Jess writes like all the time. She's publishing all the time. I think they might get paid by how often
They
publish.
do. They get paid by the syllable.
works.
No, Cameron. She studied under Cameron Kreis, and it's like Bloomberg. They get they get paid by the syllable.
Yeah, exactly.
I mean,
This is what we do.
It comes in. What are you going to write about after the CPI report?
So actually, I was looking at Gina Martin Adams. They have their economic regime model where they look at, that's also can be more of a contrarian type indicator. So for instance, at the end of 2022, when it hit a low, that would have been the contrarian indicator to say buy stocks the next 6 months. And then we had that huge rally that first half of the year. Right now, it's in not the best range, but it's more in a range that shows you it's probably going to be a little bit more volatile for stocks depending on how the data comes out. So that's some stuff we're looking at.
I don't want Sam Rowe to do the work. I mean, Sam Rowe.
I love Sam. I know Sam.
Well, I don't love him, but Sam Rowe is front running you all the time. Can you get
Tell
out
him that.
front?
Tell him that.
I want to know.
You know, he's very kind. That he'll give us shout outs in his newsletters whenever he sees our earnings related coverage. So,
okay, is a guy like Sam Rowe. The fact is, we've had history here. I'll let you define it from 25 to 17.58, whatever on the VIX.
Right.
Have we ever seen this before?
So
I don't think it's like almost like a flash crash and we're getting over it.
And then also it's important to look at the VIX curve as well as in the skew to see the demand for hedging. So if you look at if you're looking at the hedging against the SPY tracking the S&P, that's about costing actually 2 times more right now than a gain for 10%.
Bye, girl. Put the headphones on. In sync. Put the headphones on, Jess. It's very important. It's deeply emotional.